Professor Irina mentioned, I'll be presenting today how to navigate emerging risk management and actuarial opportunities here in the US, right? And in the context of the colloquium, I'm very happy that there are students here in this audience today, because I think this will be very appealing to all of them and hopefully to the entire audience itself. So let me just start by saying that actuaries, just because of the nature of the quantitative work and the theory that we study for many years, we have the possibility to work in different industries. One of the things that got my attention when I first came to the US, I'm originally from Mexico, where I studied actuarial sciences, is that here in the US, the career is very prescribed. So basically, if you follow steps 1 to 10, then you will go to a particular area of practice, you will get industry recognition, you will get the toolkit that you need to be successful, and then you have a secure career path. That is very structured here in the US and some other countries outside US as well. However, recently I have noticed that the actuarial profession has not been able to catch up with some of the trends in the industry, including those that require more creative thinking, more emerging knowledge, which could incorporate non-traditional areas of practice. So some of these emerging roles that you see on the screen are presented in a way of different industries. For example, key emerging roles are areas where actuaries can use their toolkit to be successful. The problem is that it's difficult to identify them. Why? Because there are no new people pointing you to those opportunities, or there is not a role description that say, hey, you're an actuary, you can work here, or you are an applied mathematician and you can work here, or you're a data scientist and you can work here. So it's an exercise where practitioners or new actuaries or prospective actuaries need to investigate and explore to find these opportunities. But if you look at these names, for example, fintech integration, cybersecurity, and data analytics, those are words that you probably recognize very well, right? So if you try to go to those emerging roles or industries or sectors or activities, you can be very successful because it requires quantitative skill, it requires good risk management toolkit, and more importantly, all the structure that we have in our courses at the university, such as Roosevelt, with all these professors that are very equipped to give you this theory, you can be very successful. The only problem is that, as I mentioned to you before, right, in contrast with the prescribed path of 1, 2, 3, 4, 5, you don't have a path. So you may need to investigate regulations by yourself. You may need to read books that you thought you may never be reading, and that it's slightly more difficult. However, the return on your investment of focusing on that knowledge or enhancement of role, it could pay very well. So there are few practitioners that are moving to these areas for 3 reasons mainly. One, lack of opportunities in the traditional market. Number 2, return on investment. And number 3, because those opportunities are easily available, right? There are roles that are open, waiting for someone to pick them up, but they are not tagged as actuarial role, right? Or there are not actuarial recruiters looking into those. So that's one example, right? Other examples fall into the other areas of business that we are familiar with, like banking, insurance companies, and asset managers. I will highlight just a couple of them because are quite relevant. For banking, I think risk modeling. We have seen a trend in the last 5 years of banks hiring a lot of talent, particularly quants and actuaries for model risk management activities. And that's a very important role, because while you can make X in an insurance company or in a consulting firm, perhaps in a bank you can make 3X, just because you are using your knowledge in a sector that is highly paid. So that's something to consider, right? Another area that is emerging over the last couple of years, it's climate risk modeling and ESG. And that applies obviously not also for banks, insurers, and asset managers, but in other fields as well. So the theory behind that, it's quite comprehensible by actuarial talent. So if you investigate more about climate risk and search for jobs, you will see that there are a lot of opportunities. Unfortunately, the actuarial profession is not responding very well to capture any of these opportunities. And that's where other professions are being more successful. So that's why you hear a lot about data scientists, or you listen about quants or applied mathematicians or physicists coming into these sectors, because actuaries are not taking these roles. However, there are no reason not to pursue these opportunities, right? Another sector that is very important is the decentralized finance. And picture this decentralized finance, for those that are not familiar with this concept, it's anything that it's outside the core banking industry that we are familiar with. For example, Bitcoin, it's negotiated or it's buy or sell into decentralized finance organizations that operate similar to a bank, but without the level of regulations or compliance that go with that. But methodologically, there are a lot of parallels in terms of models, in terms of risk management. While the theory might be slightly different, all those concepts apply. So many people from the banking industry, it's lifting and shifting their knowledge to that specific sector, which is the decentralized finance, including professionals such as actuaries, because words like risk management, liquidity risk, default risk are applied here as well. So that's another area of potential exploration for actuarial talent. Any questions so far or comments? Yep. All right. So now that we know and understand some of these potential opportunities for actuaries, and again, you want to find a path like ABCD, take exam 1 to 3, and you will get this. It's not like that. So it's more like a strange and dark road that you need to walk, but it could pay very well. So what I can do to articulate in more detail how these areas of opportunities can be explored, we need to think about how can we empower ourselves to take those roles, and what is the value proposition that we bring to operate into that market or environment. So in terms of the areas of opportunities, I think we can classify them in 4 based on best paid on return of investment. On the top, I have climate risk modeling. So a lot of banks will start investing in talent here. They are doing it right now, basically capacity building for internal teams and getting people from outside. So this area is very important. And just because of the way we know probability theory and stochastic processes and scenario analysis activities or catastrophic modeling, we can be very successful in this area. The second area, prioritizing the examples that I was giving you before, is the DeFi sector, where we can provide a lot of value in terms of risk assessment and portfolio management. And the good news is that it's not regulated. So we can literally use any theory that optimize investments, returns, or the portfolio, and the managers will be very happy, right? Because we will be effectively helping them to make more money by deploying more math that in other cases, like the Fed prescribes some methodologies, right? In this case, it's not like that. The other sector of opportunity is the data science integration, how to cope with all this wave of data that it's coming into the organizations, how that it's integrated into a data lake, how companies are struggling to create data structure an ETL process, basically extract, load, and transfer data from the entire business units and come together to a single framework. So actuaries can bring a lot of value because we understand data very well. We understand what is the meaning of the variables, what those variables are needed for, and we can outperform data scientists in those areas because of our domain expertise and the rigor that we have acquired or we are acquiring for certain formal paths like professional training or university courses or even informal courses like Coursera or websites like Kaggle, where a lot of competition and interesting things happen there, right? And finally, another area of opportunity is taking leadership, right? Creating content that can help organizations, clients, companies by giving them insights or analysis or perspectives about what we can do for them, right? So that's very critical. So the generation of content is something that we are lacking as an actuarial profession to do. And it's a very good opportunity that we can overtake comparatively to other professionals. In terms of the value proposition, I think I listed 6 things over here. Like we have good team skills, we can develop business, we can train people, we have good academic connect, we uh, take research and publications to the market or the academy very quickly. We have good and credible credentials, but I don't think those value propositions are enough. I think you need to bring also your own value propositions. You need to think about yourself in a similar way that I probably thought about myself 20 years ago when I came to the US, right? What different thing can I bring to the company? What is me that makes me different from others? Um, and I have certain skills of stuff that I do very well that nobody else can do in the companies, right? So you focus on those things. If it's it creating models, focus on that part. If it's assimilating theory and converting into a model, do that. If you're very good at making presentations, focus on that aspect. If you're good on developing business or selling, focus on that part. Focus on the part that you enjoy the most. It could be helping developing team skills, helping the sales team, training people, creating connect or lacing with other organizations. Focus on what you do best because with time, you'll become an expert and a necessity to the organization that you are working for. So that's beyond what an actual value proposition can be. It's more related about self-assessment and identification on how myself can be part of that journey of the organizations like banks, insurers, asset managers, and what kind of value I can bring. Obviously, when we join a company for the first time, there is this expectation that we know the theory, right? So just don't take that as granted. So when you are in the class with Wilfredo, with someone, please pay attention of the theory because that's the basis. Okay, you need to know all the theory. Whatever you do above and beyond that, that's going to be your differentiator. You need to assume that you will be competing with talent from China, from India, or like myself from Mexico, that are very good at math, just like yourself, that they have also taken and passed exams. So the exams are not a differentiator anymore. So think about it, all those soft skills, all those elements that make you different, that make you special, and bring value to these companies in whatever area you want to name it, whether it is climate risk, centralized finance, data science, or the tough leadership that you want to bring to an organization. So now things are not either, right? The role of the actual profession is evolving constantly. In fact, sadly, I see that the actual profession is declining. As of now, my understanding is that there are probably 2,500 actuaries in the US. Obviously, I'm referring to credential actuaries, people who comply with the statutory requirement from whatever actual organization you can think of and have the ability to sign actuarial reports. That would be kind of the definition of an actuary. But if we put that aside, people who are trained to be an actuary, who either studied undergraduate studies of actuarial sciences or postgraduate studies of actuarial sciences or are taking actual exams, those will be considered people with an actuarial background, in other words. So how that role it's going to be evolving. And in my view and my humble opinion is that it will evolve on five centric aspects, right? The first thing is risk modeling, right? We need to continue keeping a focus on modeling risk. And obviously, I'm speaking in a university, right? But we cannot be uh, very academic at times. We cannot assume that historical data will give us a risk model that will help us to predict the future or to understand the future. So we kind of need to manage some philosophical problems because historical data is not going to get us out of problems, right? So we need to be very well equipped, not only with math, with statistics and probability, but also understanding business, understanding interactions and dependencies and interrelation on the ecosystem that we are operating, right? So that's very, very critical. And this happens in all the industries, all the sectors, including banking, insurance, and asset managers. The second thing that it's very important, and I'm telling you from the consulting perspective, I've been doing consulting for the last 20 years or so. And basically, we get more business when there is a regulatory change. And for good or bad, companies make changes in their day to day work only when the regulator is pointing a finger to them. So they're basically saying, hey, you need to do this because you are not complying with this regulation. Or they gave them a finding, or they issued them a compliance letter because they have not completed something in the way that it's expected. So this is an area where not only actuaries, but other professionals, accountants, lawyers are very successful because your ability to understand new regulation, embrace it, adopt it, understand it, and explain it and implement it for clients is going to be critical. And if you do that very quickly and can anticipate it and be prepared with solutions for the clients, you're going to be very, very successful in this evolution of your own role. The next thing is innovation. And in my view, I'm not sure why this happens. And again, it's just my opinion. It doesn't represent the opinion from my company or any association. I think actuaries, and I include myself in that bucket, we have the tendency to be in our comfort zone. And perhaps the reason is because we are supposed to have good jobs, good salary, and we are comfortable in that little world or niche, right? And I think that has prevented us to innovate and create not only new opportunities for ourselves, but also for other actuaries. So if you look at the curriculum or the syllabus of the actuarial societies in the US or other countries, it hasn't changed in like 30 years, right? Theory pretty much the same, exam paths pretty much the same, uh, and the world is changing, right? So either the actual profession will be losing professionals and the membership will decline, or we will need to figure out an alternative path for actuaries that are coming to the industry because we are not in Chicago 30 years ago where you could get an entry level and you could survive there. That's not going to happen. So you are going to have to figure out how to innovate and create an innovative approach to integrate all your knowledge and reflect that into the solutions that you are bringing to your clients or employers, right? The other thing is the degree of specialization. It's very important. If you are very specialized in an area, uh, the the market it's going to recognize that and pay you more. Okay, you select your own niche. I will say select a niche that has lower competition, right? Meaning a niche where you can be by yourself compared to other professionals. If you go to the insurance companies, you will always find a boss that is 60 years old, 70 years old. It's been in the chief actuary role forever, and you're going to have to wait to take that role, basically, right? So that's a big problem. The other problem is that the level of knowledge that that colleague has is very, very deep. It consolidates a journey of 40 years of experience in a career, 30 years of experience, and you cannot compete by that by any means. However, if there is a new regulation tomorrow about bias for premiums in the insurance industry, and you understand it and you know it from day one, you'll get a job and you can overtake and pick a shortcut that will apply for you. But you need to stay very vigilant on this topic over here, right? Regulatory compliance. How do you do it? Well, you need to read, you need to access regulations, you need to cross-check what's happening with the other side of the world and see how things are evolving, right? And those trends will give you a guidance on how to proceed accordingly, which is kind of the work that we as consultants do every day, right? If I miss something, I have a colleague telling me, hey, Alberto, read this regulation or read this initiative. So I read it. I pretend that I understand it, and then I try to apply that in my day-to-day, either narrative to clients or calibrate my solutions or assess our market um, um, direction if required, right? And I think that effectively takes us to the last one, right? Strategic planning. So just because you are studying something, don't assume that you will be paid, but that's something that you know. So you need to think strategically. You need to sit, reflect, and ask yourself, okay, how I'm gonna be myself in 5 years? What kind of role I need to have? What kind of activities I would like to do, right? In my case, I asked myself that question 15 years ago, and I said, okay, I want to work from home. So I found an employer that allowed me to work from home, and I'm still working from home because it gives me a lot of flexibility to do many different things, right? That I also like to do. So you need to have that strategic planning, write down your own role description, and then go and find it, right? And I'm pretty sure that you will find something that aligns with you. So that's with respect to the vision on the evolving role of the actuary. The next thing is, okay, we are not alone, right? And it's not like X-Files type of wording or like UFO type of tagline, right? But literally, we are not alone, right? We are competing with other colleagues, very talented, very smart, and they are beyond the actual profession, right? We also have colleagues that are data scientists. We have quants or quantitative analysts, as we call them, and we also have applied mathematicians. And when I say applied mathematicians, I'm saying PhDs with math, PhDs with physics. And these guys are very scary because they always tell me, hey, Alberto, you are forgetting this hypothesis before running your model. And I say, what hypothesis? And yes, I say, yes, you are right. So these guys are very strong, right? In many areas that we are not, particularly the theoretical framework. So knowing and understanding what these professions or areas of extension for us are will enable us to fill gaps that we didn't know that existed, right? So that's why I kind of created the following chart to compare some of those different aspects, right? So I'm pretty sure it's probably difficult to read, but just to let you know, this is kind of the actuarial boundary. Okay, so the red one represents the actuary. This blue one, the data scientist, the pink is the quant, and the orange, the applied mathematician. And all these words around are basically attributes, variables, soft skills, or hard skills that we are comparing each other against. And the 0, 1, 2, 3, 4, 5, it's the metric or the score that, by which we are doing the comparison. 0 means lower, and 5 means highest. So let's pick one component for comparison purposes. And I think I mentioned to you the innovation part, right? So if you look at the innovation component, the actuaries were typically at the bottom of the comparison between the different professions, right? Because it's close to the number two radius, sorry. So it's very low, right? The other thing is who is the highest in this kind of comparison? Well, is the data scientist. And the reason for that is because they are very creative, right? They take the data, they start uh, making analysis for from theory that maybe it doesn't apply, but they are doing it, right? And in that process, they come up with different ideas and different approaches to analyzing that specific data. So all of those professionals bring different characteristics, right? Another contrasting example where actuaries are probably on the top part of the spectrum, maybe is on the ethical side. Actuaries and regulatory compliance, we are ranked very, very high, close to 5, right? And look at the other spectrum, right? The data scientist. And the reason for that is because they run everything without thinking and without checking, right? They may be using gender-based data for a calculation, and maybe by law you cannot use gender to do that type of analysis. So this kind of contrasting benchmarking strengths or weakness can be analyzed on the basis of this comparative chart. In other words, if you kind of zoom back on this chart, you can really see what is the trend, right? If you look at this area, which basically means professionalism, industry expertise, domain expertise, business acumen, actuaries are very high rated, okay? But look at this angle over here. Theory, research skill, programming efficiencies, computer sciences, we are very low compared to others, right? And there are even other areas like project management, right? All of us, whoop, we go down, right? We are in the radius number 3 because quant people typically are not good at people management skills, right? So we are always going to be ranked way below compared to other professionals, right? And something that is very interesting is, for example, applied mathematicians, right? Everybody say, "Oh, who wants to bring a Sheldon kind of person to my team who is very nerdy, who knows everything, and doesn't have any social skills?" You know what? You may want to bring it because those are the ones that have superpowers for problem solving ability. So if you have a PhD person, you probably have a very high brain power in your team. And not only that, but also theoretical knowledge. And that theoretical knowledge check, it's always very, very important, especially on projects that require regulatory scrutiny. The regulator can say whatever they want, but the theory is the theory, right? So if it's correct theoretically and there is no regulatory reason to decline it, it can prevail in terms of usage for your particularly business or use case. So here are some, random insights about benchmarking the role of the actuary vis-a-vis other professions like data science, actuaries, sorry, quants and applied mathematicians, right? So this is quite interesting in my view. So before turning to the next slide, I wonder if you have, any questions or any comments.
Just want to say some mathematicians really enjoy collaborating. So these are just very general statements.
Yeah. No,
I
absolutely,
feel
right?
like the need to speak up for applied mathematicians.
Yeah, absolutely. No, but it's interesting, right? But it's like stigma, right? In my view, right? It's like saying like, all Mexicans wear sombreros or take siestas in the afternoon, right? It's not the case. It's an stigma, but it's ranked this way because of that stigma that seems to prevail in some of the work environments. But I agree with you, right? The mathematicians that I work with, because they are in this corporate environment, we collaborate very well. However, I think what I have found is the communication language. I don't think everybody is able to collaborate with them well, but it's not their fault, right? I think it's the inability of their counterparty to use a language that is more fluid for solving problems. I think that's the gap. So I'm not sure who to blame, right? Whether the applied mathematician needs to create a new spectrum of communication skills, or the other people should take a leap into that type of activity, right? So it's like a multidimensional problem. In my case, I communicate very effectively, perhaps because I understand some of the theory. But if you ask someone from finance who is an accountant, it won't be able to work with them, right? They won't understand the way we quants or actuaries work. So I guess this grading reflects collaboration, not between these type of um, roles like data scientists, actuaries, or quants, but more like uh, enterprise-wide. I think that's how we should read this one. So that's why we have this score. I agree with you. I mean, I collaborate with the mathematicians very, very good. Excellent. All right. So when I was thinking about this presentation and based on past experience working with students or young professionals, I think the main question is, okay, what is my roadmap, right? What is the next step? What do I need to do to map myself into that environment of opportunities the way you are describing it here, right? And I say, okay, everything goes back of where you are in your journey. And many times that journey is depicted by your age, right? Obviously, it's not intended to be discriminatory or anything, but it's basically what it is, right? Kind of an industry expectation or activities that you need to achieve by a certain age in terms of milestone. So I will say, and I think I used this word previously, right? Exploration. Um, the sooner you explore the market, the better, right? And how do you do that exploration, right? If you're working with an employer, many of the new companies have instituted cross practice projects. For example, 1 year you work in a business unit, the next year you work in another business unit. So effectively enabling exploration, especially because at the early stage of the career, young professionals, including myself, we do not know what to do and especially how to do it. So we need not only guidance, but also exposure to different problems to explore the horizons and understand what is happening, right? But we cannot limit ourselves to the employer only, right? We could invite colleagues to take a lunch, to have a meal with them and understand what they are doing, or look at profiles in Glassdoor or LinkedIn, read professionals in other areas, in other fields, to kind of do a reality check of what's going on in the industry, right? The second thing is developing the skill. I don't think actual exams will get you where you need to be. That's kind of a baseline requirement, but it's not a differentiator, right? People from the University of Waterloo, they are graduated with 4 exams, right? People from Heriot Watt, they are graduated and close to have 5 exams. And people in China, they are not even in US and they already clear six exams after they finish the math uh, courses, right? Same in India, right? People haven't finished the university and they already have 6 exams. So that's not a differentiator anymore. Maybe it was in the 90s, but not right now. The third thing is job exposure, right? You need to get exposure in your job. Doing the same thing over and over again is not going to get you anywhere. So don't get into a role where you are doing statutory reporting year one, year two, year three, because you're not gonna get outside that environment. There, the fourth thing, and I think this is my favorite, because I get a lot of ideas by talking to people, mentorship. Find someone that it's open to talk to you and help you to get some orientation all the time. I do it myself all the time, every day. I talk to different people. I ask advice to all the people that I talk to, and I always get very good ideas. So discuss these opportunities to get insights, and not only insights, right? How can you action that insight? How can you convert that idea into something meaningful? And you are the only one who needs to drive it because it's your career, right? Nobody, not even a recruiter, is going to do it for you. The recruiter gets the commission, end of the story, right? 50% of your annual salary, end of the story. That's it. So you need to figure out, right, how to drive all those initiatives. Uh, this thing, and I think it's very accurate to put it at the year of 30 because you start thinking about, okay, how can I contribute from all these learnings at my job, in my family, in my academy, in my actual group, all those contributions based on the knowledge that you acquire, excuse me, are going to become very important and very fulfilling once you reach that stage. The last two things, needless to say, I think these are daily activities rather than, wait 10 years, right? It's not like that, right? You need to have a continuing learning from day one. Don't wait 10 years, right? But it's important that you never forget that you need to continue developing your skills and learning. And as you reach 35 or sooner, you need to start thinking about, okay, what kind of leader I want to be? How can I influence others to do stuff or follow a path that is very positive? So you need to think about leadership development. And there are many ways to do it, right? So discuss opportunities in your university, in your school, with your employer, and you will see a lot of benefits by taking more responsibility, articulating solutions for your clients or your employer or your academy, and then reflecting that back to the impact that you are creating in your own sphere of action, right? So I think I have spoken a lot, and I promise you that I will be speaking only for 45 minutes. So let me just kind of outline a few conclusions. Obviously, I'm an actuary, right? So I need to speak on behalf of the actuaries, but I don't feel that being actuary is like the coolest stuff in the world. I think it provides you a lot of tools, a lot of theory that you can deploy for many different aspects. But being an actuary, it's also limiting you from other opportunities, especially emerging areas and innovation areas. So really think about how you can explore this dynamic landscape and going outside the traditional paths, because the traditional paths honestly are very safe. Okay, don't get me wrong. You will get the amount of salary that is in those surveys from those recruiters that you are familiar with. That's completely true. But do you want to wait 10 years, 15 years, 20 years? Do you want to follow a path that there are already thousands of people following? You need to ask that question yourself, right? So just keep that in mind, and take with you, these aspects over here, right? Like we as actuaries or quant professionals, we have the tools to work on risk modeling. There are a lot of emerging roles where we can provide a lot of agility to the teams, and also industries that are emanating, or solutions that are fairly new, and we can use for purposes of improving business problems, or solving business problems from all those industries that I mentioned to you, right? From the banking industry, the insurance industry, asset managers, trust funds, right? So I guess, just to conclude this presentation, from what I said at the beginning, right? Um, we need to look at these emerging opportunities with a pinch of salt. All right, there are risks into going to these new sectors as well. There are risks of, you get there and the roles don't evolve as we were thinking, right? So you need to construct good hypotheses and inform hypotheses, make a prediction on the basis of those hypotheses, and test it, right? Test it with the effort. And even if that sector doesn't convert in what you were thinking, all those skills that you acquire in the journey are going to help you to be more successful in other steps that will cross in your uh, career path. So I think embrace learning, continue exploring sectors, either existing or new, and I'm pretty sure you will be part of an exciting journey in the profession. So I think with that, I'll just stop my intervention today. I just want to thank Professor Rubina for inviting me to this forum, and as always, very happy to talk to the faculty and students of Roosevelt University. Thanks a lot.
Thank you, Alberto. Really very illuminating, and I think will be very useful especially for our students, but also for us, because yes, we need to accommodate new courses and try to develop new alternatives. So thanks a lot for the time that you invested preparing this talk. And if there are any questions or comments.
I have a question.
Yep.
So the DeFi, the decentralizing finance, I would like to know more about it. It seems like you're talking about in very general. So it's more like a blockchain technique that you're talking about, right? And what kind of like example of decentralizing finance are going on in the industry? Is that possible to explain?
Yep, absolutely. So think about it like a parallel banking system to the system that we have, where instead of the US currency, they will use cryptocurrency. So effectively, crypto lending. In a similar way as you have a bank account in a regular bank, you will have a wallet into these organizations that will serve the role of your checking account. And what that is indicating is that these decentralized finance organizations will have portfolios of loans that are based on cryptocurrency, for example, Bitcoin. So as you can imagine, we are using concepts from the banking industry that we are very familiar with, like deposits, like liquidity, like lending, like interest rates, like rewards. All those concepts, they have an analogous definition in the DeFi industry, but the currency is different and everything is happening virtually. So effectively, portfolio management theory with some caveats can be lifted and shifted from the banking industry into the DeFi industry, where instead of having checking accounts, you will have a electronic wallet. So blockchain is part of that ecosystem, but blockchain is more like the enabler, the aspect that connects the operations of how the money is transferred from point A to point B and attributing ownership to those transactions. So blockchain is the technology that enables the classification, organization, and tagging of the accounts. But the risk management component, it's very similar. So you can effectively construct rates of return. You can construct probabilities of default. You can construct liquidation thresholds. And all those require quantitative expertise, because some of them you may have to use Monte Carlo simulations, for example, to determine the paths, or stochastic projections. So as you can see, similar theoretical framework being applied into a field that it's analogous, like the banking industry, but for a different business case. So what I will be happy to do, perhaps, Professor, and given that we have the experimental class, maybe we could do a crypto lending use case one of these days, right? And illustrate the use of all these things in a simplified problem statement that the students can handle at their end. But again, this is just one small example of an area where the theory from finance, from financial mathematics, could be, or risk management could be applied to decentralized finance sector.
Sorry, just one more further question.
Sure. But did I answer the question? Just to make sure.
Yeah.
Okay.
I kind of understand it. So is it really happening in the banking industry, or is it kind of like a ongoing research? I mean, I'm not, because I haven't seen anything in the real practical like application in the bankings or in the insurance yet. Maybe I'm kind of behind the technology they are using it, but
You mean application like blockchain
yeah.
in the banking industry and insurance industry?
Yeah. I mean, the one that you said, it seems like it's kind of like I don't see actually the actual DeFi used in the banking or the insurance field. Is it ongoing research, or is it happening actually in the industry?
Okay, no, the DeFi is definitely happening. Okay, so it's happening as we speak. There are millions of equivalent US dollars into the DeFi market. So it's like effectively a parallel banking system. It exists, it's happening as we speak, and the theory is under development, the methodologies are under development, but these companies, they are using them to calculate and mitigate risk as we speak. So that part, there are no doubt of it, right? So it's happening. Whether the elements from decentralized finance are applied into banking and insurance companies, that's a different story. So the adoption of new techniques, the adoption of new areas currently in progress in DeFi, it's very slow for many reasons. Number one, the banking industry and the insurance sector are very highly regulated. Okay, so it's not as simple to bring something new. So that's one thing. The second thing, the adaptability of those things, they don't have any value because the problems statements are different, right? The way you forecast cryptocurrency is different compared to the way you forecast forex or currencies in the regular banking industry. So it's completely different. So that's why there are opportunities to work in those fields because there are very few professionals in those areas. And this can be extended into other DeFi areas like fraud analytics. To analyze fraud, you will probably need to create your own library in Python that can read blockchain, right? So there are no libraries that are publicly available, for example. So you can imagine, right, how things are under development under the DeFi side, and it's not regulated. The only part that is interesting for those organizations that are in the DeFi business is not lose money and make money. And if you have the math that allows you to do that, you will do it. That's basically what is happening in that sector.
Alberto, well, this is more a general question that, I mean, precisely, there have been a couple of scandals, recent scandals, in that area of non-regulated area, you know, the FX, and now the be fine or whatever it's called. So you have any, what is your opinion? I mean, how that will work in the future? I mean, if you can say, of course, that there are also scandals in the banking system that is highly regulated, but of course, when there is no regulations, you know, it's a wild, right? I don't. What is your opinion of that? I mean, how you see it?
Yeah, I picture it more like the gold fever, right? A lot of people going into some fields that are very lucrative, but I think ethics and strong ethics will be always the driving force of professionals that are going to be very successful. For example, let's say that tomorrow some of the students have the opportunity to work in a DeFi organization, right? That is using blockchain and is lending crypto, and this person is working on the portfolio, right? And this person identifies something unethical. I think the best road to action for that person is figure out what will be his role or her role within that environment, right? At the micro level. Because at the end of the day, companies are founded by people, and people is the sector that is more prone to unethical problems, right? Not the company itself. And many of these scandals will continue. I don't think we can stop them. But as professionals, I think the obligation is to do the correct diligence to getting into the correct market and business, or get out of the business if the situation converts into an ethical problem, right? I think with time, what we have observed through history, there is a convergence of regulations, right? And eventually, crypto will get regulated once US, particularly, I'm using the US as an example, once it determines if they want to have a virtual currency, right? All those things will help in regulating the market. But just because of the nature of the virtual currency, it's very difficult to control what other markets or countries are doing, right? And that elevates the level of risk. So that's why, if you remember, I added cybersecurity as one of the emerging areas. So knowing and understanding cyber, it's very, very important as we move from hard currency into soft virtual currency. But that's kind of my brief opinion on these matters, Professor Urbina.
Any other question or comment? Well, thank you very much, Alberto. I think that will be very useful for all of us, faculty and students. And well, I hope to see you soon back here with more ideas and suggestions. Thanks again. Okay.
Yep, not a problem. Please take care.
Bye, everybody. Have a nice weekend. Take care. And happy holiday for everybody. Bye.